Hi, Bitcoiners. It's Mark Berger here, your Bitcoin consultant. And the price of Bitcoin is catching everyone's attention, but not for the right reasons, as you probably know. So, right now, we are at block height 924,609, which in human terms is Friday, November 21st at 3:22 p.m. Eastern Time. And the price is exactly $84,000 according to my feed. So I want to talk about a lot of things today that are interesting in the Bitcoin world, but I will not delay the information that most of you are probably wondering. What is going on with the price of Bitcoin? How low can it go? Have we seen the bottom? And what can I do about it? So we broke through a crucial support level yesterday under $88,000, and we're currently at 84. If we do not hold this level at $83,000, which we were at this morning, we actually touched down at $80,000, which is a bad sign. We really did not hold firmly $83,000. I am looking at prices going down now to about the $70,000 level, just because there's something known as what was once a ceiling is now the floor. In other words, what was preventing prices from going up in the past beyond a certain level, which is the ceiling, is the resistance. Now in the future, it becomes the floor. It prevents prices from going lower. And of course, the price I'm talking about is about $70,000 to $71,000, which was the used to be the all-time high, which we reached in November 2021. So I think that's the floor that we're looking at. And if the price actually goes down there, to me, that is a great opportunity to buy Bitcoin. And uh, it's just a great opportunity. But there's no guarantee we'll get down there. So in the meantime, if you're looking to add to your Bitcoin position, or if you're simply looking to get into Bitcoin, this would be an excellent time to do so. And you can do that by simply buying small amounts of Bitcoin and doing it for the next 30 days, whether that's $10 a day or $1,000 a day. I think this is an excellent strategy at this point because we are somewhere around the lows for this correction. And it's a correction because we are still in a bull market. And you might ask, what will it take to get us out of the bull market? Well, we would have to go quite low. We would have to break the previous lows of the previous cycle, which is really down around $16,000. If we go down below $16,000, yeah, the bull market is over. But we've got a long way to go before that. So overall, Bitcoin is still in a very strong position, but we've dropped 35% just in the last month or so. So people are freaking out, but this is the volatility. And this is also the opportunity because people complain about volatility to the downside, right? When prices go down, but they don't complain about when prices are volatile to the upside. Everyone loves that type of volatility. But the thing to remember is you can't have one without the other. You can't have soaring high prices without collapsing, gut-wrenching downturns like we're in right now. So the proper and real perspective to have for the Bitcoin price right now is to be happy. If you truly believe in Bitcoin's fundamental value as the best money that man has ever created, you have to be happy for this opportunity. You have to be happy for this big pull down because just like a slingshot, if you don't pull the slingshot back, you're not going to get the propulsion upward. You're not going to get the force to drive us upward and beyond. So if you want a strong rocket ship up in the future, you've got to be happy for this pullback right now. And the further it goes back, the further we'll rocket up in the future. And that's just sort of the way markets work. The energy in the market is always balanced. What goes down goes up. And as long as we're in a bull market, this correction is very healthy, in my opinion. So think about starting to dip into Bitcoin consistently right now. probably for the next 30 days. I think it's a great way. And then if we do get down to the 70, $71,000 level, then you can put a big, big pile of money into Bitcoin. Push your chips onto the table, so to speak, in the poker language of it. Put your money in. Now, of course, this is not financial advice. I am not a financial advisor. I am not qualified to give financial advice. This is just my opinion. And if you're watching this, I hope this is entertaining and gives you something to think about, but not financial advice. So if things don't go the way I say, and if you took my advice, you're responsible for what happens to your money. Anyway, I have to put that disclaimer out there. So the next question that might be in your mind is, well, why is this happening right now? What is going on right now? Well, I think there are a number of factors that are going into this. One is that the overall monetary picture, particularly in the United States, is under duress right now. And there are a number of macro analysts that you can tune into to get the details of what's going on here, but there seems to be a stress in the banking system that is due to too much public debt at the United States federal level, and too much debt in the banking system overall. The commercial real estate market is absolutely horrible. It has been ever since COVID. Banks are sitting on very large losses on their loans. That's one factor. And then another factor I think is this AI boom is showing cracks of coming apart. Um, Something like Enron, which if you're old enough to remember happened in the year 2000, 2001. Enron was a darling of the stock market. They had financialized energy markets. They made a tremendous amount of money off the California energy crisis when I was living in California back around 2000. And they were seen as some sort of a new unicorn, of a new way of making money through energy markets. But it turned out the whole thing was a scam. And the scam could be seen from the financial statements in Enron itself. And some prescient and observant financial advisors were able to read these statements and see how Enron was really just a bunch of smoke and mirrors. And when these analysts confronted Jeffrey Skelling, who was the CFO at the time, and the CEO at the time, I forget his name right now, but anyway, these two executives at Enron were confronted with these problems that the analysts saw in their financial records. And they sort of hand waved off the objections about the peculiar and strange financials that were being reported. And the executive said, well, if you don't like our stock, we'll find someone else to buy it for you. I mean, how dare you question, what we're putting out there? The classic, the emperor has no clothes, and if you can't see the clothes, well, you're just too dumb or something to notice what's really going on here. But of course, these executives at Enron were pulling the wools over everyone's eyes, just like in the fable, the emperor has no clothes. And so I think something similar is happening right now in the AI industry. A tremendous amount of money is being funneled into AI. The primary beneficiary has been NVIDIA, the maker of the computer chips that power the AI industry. NVIDIA is the most valuable company in the world right now, something of a $5 trillion market capitalization, and is the best performing stock over the last 5 years. And in fact, I think it's actually the best performing asset now over the last year or 3 years or 5 years. I'll put the graphic up here. So it's enjoyed a tremendous run up, but there seems to be some financial shenanigans going on with AI, software companies, and hardware companies, where they are simply sending money to each other in a circle. So Microsoft orders $100 billion worth of AI from ChatGPT. ChatGPT orders $100 billion worth of chips from NVIDIA, and NVIDIA orders $100 billion worth of software or something from Microsoft. So the $100 billion just gets passed around in a circle, and all the companies get to treat that as revenue and then to book profits on this revenue. But the money is just going around in a convenient circle, and it seems like it's something of a conspiracy or a monopoly practice, which is borderline illegal. I'm not a lawyer, so I don't know the legality of it, but it seems really shady to me. And at the very least, me and other people are seeing that there's something not there. The emperor does not have his clothes on, and yet they're trying to tell us they're making a lot of money. And yes, ChatGPT charges, I don't know, 20, 29, $50 a month, but they're not making billions and billions and billions of dollars. And I don't see any other AI company truly making billions of dollars. So AI might be the next great technology. It might be something that's big in our future, but right now it's not making money. It's sort of like internet companies or Amazon in 2001. Might have great promise, but right now they're not making money. And so these companies might be tremendously overvalued that have leveraged their stock price to the future of the AI technology. So I think we're starting to see a pullback in the whole financing in the stock prices of these AI companies. And I saw a note yesterday from an analyst who says that the AI industry has pledged something like an enormous amount of Bitcoin. They've used their Bitcoin as collateral to borrow money to build out their AI operations. And so, if all of that Bitcoin collateral was forced to be sold in order to cover demands from creditors to get money back, they believe that Bitcoin could go down to somewhere around $52,000 a coin. Now, that isn't too far off from my ultimate low in Bitcoin price of $70,000, but I don't think it's going to go down to 50 because I don't think all of that Bitcoin will get liquidated. And I think a lot of people are going to step in and buy before it gets to that price. And another reason for this decline in the price of Bitcoin is that the ETFs, primarily BlackRock, the largest Bitcoin ETF, holds something like 700,000 Bitcoin, I believe, 800,000 Bitcoin maybe. They are selling a lot of Bitcoin. Now, of course, BlackRock is not unilaterally deciding to sell Bitcoin. It's that the holders of the ETF, the retail holders or the institutional holders of that ETF are selling the ETF. So it turns out that these holders of the ETF, which holds Bitcoin for their customers in lieu of holding Bitcoin yourself in self-custody, which is what I teach people how to do. I guide people through that process of not relying on a third party like a bank or an ETF to hold Bitcoin, but to hold it yourself. Anyway, these ETFs are forced to sell because the individuals or the companies that own the ETF are panic selling Bitcoin right now. So you might remember in my last video, I talked about my thesis was that these new holders of Bitcoin through the ETF would be a little bit more mature. They wouldn't be panic selling like individuals have a tendency to panic sell. We call that the retail panic sell. And these institutional investors would be holding for a longer duration period. And at the first sign of a decline in Bitcoin's price, they would not be selling. That was my thesis. But that seems to be not true. And I think that's a lot of the reasons why we're also seeing a decline in Bitcoin. So all of these things, and one more that I'll get to, are pushing the price of Bitcoin down. Now, I am wearing a shirt that says St. George. Now, this is from my son's old school, but anyway, I wore this shirt because St. George represents um, it represents slaying the dragon. St. George was able to slay the dragon. Well, dragons may not be real, and I think we can look at the dragon as a metaphor. What is the dragon? The dragon is our wild fears. It's our panic. It's when we lose our minds. It's when we lose control of our emotions. And as investors, we have to slay the dragon. We have to kill that impulse to go against what we know is true, to go against our higher thinking capabilities, our critical thinking capabilities. We have to keep our wits about ourselves. We have to keep our mind, keep our head screwed on straight so we're not, going crazy. Oh my God, the sky is falling, the sky is falling. We have to slay our own dragon. When the price is falling like this, we have to keep our heads about us. We have to slay the dragon. We have to remember why we're holding Bitcoin, why we got into Bitcoin for the first place, and why we're going to hold it for the long term. Because we don't hold Bitcoin for months or even a year. We have to have at least a 4-year time horizon from the time we buy Bitcoin. So I have clients right now contacting me, very concerned. No one likes to lose money. But remember, you never actually lose money in Bitcoin unless you sell Bitcoin for a loss. And as long as you don't sell, and if you can hold it long enough, the history of Bitcoin is always that if you hold it for 4 years, you gain if you want to sell after 4 years. So we have to keep our wits about ourselves. We have to slay our internal dragons, our internal fears. Remember why Bitcoin is the best form of money ever created. And if you have any doubts about this, you need to talk to me because I'll set you straight and I will give you conviction. And I've been studying Bitcoin for more than 10 years, and there's nothing else like it. And this is really humanity's opportunity to free ourselves from oppressive central banking, monetary slavery, and debasement through inflation. So this is why we hold Bitcoin. There's nothing else out there that can do it for us. Gold is the only thing that comes close, and gold failed as money for reasons that I've discussed in other videos. So slay your internal dragon and you'll be able to stay the course. The last reason that I think is contributing to Bitcoin's demise is that there is a debate in the Bitcoin community, particularly on what is known as Bitcoin Twitter, the people that talk about Bitcoin on the application now known as X. And there was a release of the most popular form of the Bitcoin software that we call running a node. And this software is called Core, Bitcoin Core. And this version was numbered 30. A Bitcoin Core version 30 was released in October, not coincidentally, I think, right around the all-time highs of Bitcoin at $126,000. Now, the big controversy about this new release of the software that most people, most Bitcoiners run, about 80% of Bitcoiners run, is that it removed a constraint in the relay policy of Bitcoin, the constraint being you cannot include data in a particular data field greater than 83 bytes. And if you're not a computer scientist, 83 bytes is pretty small. It's a reasonable amount of data to do some reasonable things with the Bitcoin blockchain. But the developers of this new version of the core software blew open this restriction to 100,000 bytes. And 100,000 bytes, you might know, is 100K. And 100K is a good-sized image. So I won't get into the details of this controversy because it's quite complicated, and I'll give you actually a link to Bitcoin University and Matthew Kratter, who's been discussing this issue in quite detail in a way that I think is easy to understand if you want to learn more about it. But basically, I believe that this new version 30 opens up Bitcoin further to an attack on Bitcoin itself and threatens the decentralization and the government intervening sometime in the future into Bitcoin's sovereignty and freedom from governments, actually. So I and others like us are quite concerned about this and have raised quite a stink for good reason, because Bitcoin doesn't defend itself. Bitcoin needs users like me and like you to defend the decentralization properties of Bitcoin and keeping Bitcoin as money and not allowing Bitcoin to be hijacked. In this case, being hijacked to be used for arbitrary data storage, storing 100K files on the Bitcoin blockchain. So we can't remove these files once they're on the blockchain because Bitcoin is uncensorable. So this is a real threat to Bitcoin, and I'm quite concerned about it. I don't think it'll kill Bitcoin, but it's definitely creating a rift. There's no doubt about that. It's creating rift and a conflicts within Bitcoiners, people who really are big fans of Bitcoin, holders of Bitcoin, and it's causing a lot of dissension. And of course, it reminds everyone that divide and rule is always a possibility in the Bitcoin community. And there are forces out there who want to destroy Bitcoin, who want to make it weak, who want to put it under government control, who want to put it under central banking control. And to divide and conquer the community is a way to achieve those nefarious goals, in my opinion. But that doesn't mean we just sit back and allow the wrong thing to happen to Bitcoin. We have to do the right thing always, no matter, even if it means the ultimate death of Bitcoin. We have to do what's right. We just can't say, oh, we've got a lot of money invested in Bitcoin, so we give up the fight. We give up doing what's right. Because as soon as we give up doing what's right, we give up what's right in Bitcoin. We have to do what's right in order to maintain Bitcoin's superior moral stance in this war against central banking, which is not only immoral, I believe it's illegal, and it's a crime against humanity. As soon as we lose the high road in Bitcoin, we lose everything that we're fighting for. So I encourage you to learn more about this debate. And if you run a node, I encourage you to run knots at the very least, which is an implementation that maintains the 83 byte limit of arbitrary data in every block. So that brings me to the last point that I want to talk about. And there's a significant date coming up in Bitcoin, which is going to be March 18th, 2026. And this date comes courtesy to us from Martin Armstrong. Now, Martin Armstrong is a man that I have followed for many years and a very controversial figure, but I think it's safe to say that he is the most accurate forecaster alive today and perhaps the best forecaster in the history of humanity. Not only a financial forecaster, but a political forecaster and a social forecaster. He seems to have found a secret code that governs humanity, or at least something very, very close to it. He's been able to predict a number of of fascinating occurrences, like the fall of the USSR, the 1987 stock market crash on Black Tuesday, was it? October 18th, 1987. And he is widely respected as probably the greatest forecaster alive today. And he bases his analysis on cycle analysis. He says everything is a cycle. It's based on cycles and everything is interconnected. It's not just financial markets, it's political elections, it's wars, it's science, it's technology. Everything comes together to produce these cycles. And he bases it on pi, 3.141, whatever. And he has observed that most things follow a 8.6 year cycle. That 8.6, I'm not sure exactly how that number derives from pi, but that's sort of the simple way of thinking about it, is that everything goes in 8.6 intervals, whether that's 8.6 elections or 8.6 years or 8.6 whatever. So the first time we had the first 8.6 year cycle in Bitcoin's life was calculated from its inception when the first block was produced, January 3rd, 2009. Move that forward 8.6 years and we get to August of 2017. And you might know that August 2017 was a very important month in Bitcoin's history because that's when we resolved the big blocker debate. And we resolved the debate as to who really controls Bitcoin. Is it the big corporate miners with all the money and hash power behind it? Or is it ordinary people like you and me who run the Bitcoin node software? Well, what was resolved in that block size war, is what it's called, is that it's not the miners that control Bitcoin who wanted to have big blocks. It was the node runners who wanted to preserve our ability to easily run a node. We said no to big blocks and we won. And as a result, we implemented probably one of the greatest improvements in Bitcoin, which allowed us to have the Lightning Network and second layer effects on top of Bitcoin. That improvement is known as SegWit, and that was implemented in August 2017. So a very important day in Bitcoin's history. So that was the first 8.6 year cycle date. Now add 8.6 years to that August 2017 date. we get to March 2026. So something really big is probably going to happen to Bitcoin on that date of March 18th or sometime around that date in March 2026. Now, what will it be? We don't know. We can guess. We could say, oh, well, maybe Bitcoin is going to go down, say, to $70,000 or $50,000, and that'll be the bottom of Bitcoin, and then we'll just rock it up. Or maybe Bitcoin from here will go up to $150,000 and then will decline. Or maybe something more like SegWit is going to happen, something more at the protocol level. We're going to change the protocol rules of Bitcoin in some way to repel an attack on Bitcoin. And that's what I think is going to happen. I think we are going to resolve this issue of the 83 byte op return in March of 2026. Now, I don't know if we're going to change the protocol. I don't know if Core 30 is going to roll back their 100,000 byte limit, which is another possibility. But I think this contentious issue of op returns and using Bitcoin as arbitrary data storage, I think it's going to be resolved. And I think it's going to be resolved in the favor of those of us who believe that Bitcoin's number one use case is money. And it's not as a distributed database for arbitrary data. No, it's for using money. It's for uncensorable money beyond government control. And we are going to reaffirm this primary use case of Bitcoin, and it's going to be decided in March of 2026. And I think once this is firmly decided, again, it'll be another lesson as to how Bitcoin really works, how it was intended and designed by Satoshi to work. And we are going to carry on this vision of Bitcoin as uncensorable, censorship resistant money, money beyond central bank control, money that is uncorruptible, is scarce, is provably scarce, and is open to anyone in the world. So I think that's enough for today. And oh, one other thing I want to tell you about is that a company that I like, Ledn. Ledn allows you to borrow money against your Bitcoin. So if you have one Bitcoin, if you're lucky enough to have one Bitcoin, you can use that one Bitcoin as collateral, give it to Ledn, and they will give you the value of half of a Bitcoin back to you in the form of cash, of US dollars. And you can use that cash then to buy more Bitcoin. And this might be a really good time to do that. Now, of course, when you borrow, you're taking additional risks. So you have to really think about this. And I don't advocate this for everybody in all situations. But Ledn also had some great news this week. And I'm very excited for them. And I know the founders. I've been with Ledn for a number of years as a client in various aspects. I was with them through the 2022 bear market and 23 bear markets, and I worked with them through the collapse of FTX, through Arrows Capital, Celsius, BlockFi, etc. And they were the only lender, Bitcoin-backed lender, that really survived in my mind and did a good job of managing the enormous risks that were pulling Bitcoin down at that time. So the big news is that they were just had a huge equity stake. In other words, another company came in to invest in their company to give them money to back them further. And that company happens to be Tether. Now, Tether is probably the most profitable company in the world on an employee basis. So per employee, they make more money than any other company in the world. And they are an issuer of stable coins and also one of the largest holders of Bitcoin too. So a lot of the risk for Ledn going out of business has now just gone away because they're now backed by the number one stable coin company in the world and the most profitable company in the world on a per employee basis. So it's a huge vote of confidence for Ledn and the founders, Adam and Mauricio. And I think it's a great testament to the work that they've done over the last 5 years, 7 years they've been in business. And so I highly recommend them. And I have a promotional code to get 25 basis points off a Ledn loan if you're interested. Set up an appointment with me. I'll provide a link here. in the notes and also in the video if you want to talk more about Ledn loans, and I can give you the lowdown and all the details about the pros and the cons of getting a Bitcoin backed loan from Ledn. So that's all from now. And remember, slay your dragon, hold the course. And if you want to add to your Bitcoin position, I think this is a great time. And run a node if you don't already. And please consider running a NOTS node to verify your belief that Bitcoin should be used only for money, especially at the base layer. And NOTS will filter out arbitrary data from relays in the mempool. So that's it for now. Hodl on, and let's slay the dragon.